All right, so today I wanted to make a video on a concept that has gotten very popular recently, and that is weekly dividend ETFs. And specifically, I wanted to make a video on how you can get paid every day of the week. Now, again, this won't include weekends, holidays, and sometimes there's delays in getting paid and you don't actually get paid till the next day. So it's not going to be 100% of weekdays, but it'll be close to it. So I want to get right into it. First things first, if you get value out of the video, please like and subscribe. Check out the links below as always. So let's get right into it. Now, we're going to go Monday through Friday just to make it simple. And to be clear, I only own 5 personally, and these are the 5 that I own. Now, honestly, it didn't necessarily work out that way. I wasn't trying for it to work out to where you get paid every day. Honestly, these are my clear top 5. Now, again, technically I could cherry pick and move it around a little bit, but these are the 5 that I went with, and it just so happened to work out that they actually pay Monday through Friday. So let's get right into it. The first one is BLOX. Now, this is one I made a video on recently. This one is the Nicholas Crypto ETF, 103 basis points, 8.3 is not the right dividend yield. So this one basically is a Bitcoin or not Bitcoin, a crypto ETF. Now, again, it mostly is Bitcoin, right? I mean, top holdings, the VanEck Bitcoin ETF, the Fidelity Bitcoin ETF, the iShares Ethereum, Galaxy Digital, Robinhood, Riot, Hut 8, IREN. So it's mostly Bitcoin. Looks like there is some alt exposure, which, again, I don't necessarily like, but it is what it is. This one has actually performed, I think it's performed the best out of the ones that are here, although there is one that has not been around for very long, and all of them except for one has not been around for that long. But I mean, if we look at this one came out it was June 17th, and it is up with dividends reinvested. It's up a little over 47%. Just the price returns is 35% as opposed to the S&P's 12%. So this one has absolutely destroyed the S&P. That's why I own it. You know, the plain and simple of it. This one actually pays the lowest dividend yield on the list, which, again, whenever you're looking at dividend-focused funds, you always need to take a very close look at what is the overall returns, because there's a lot of these dividend ETFs, whether it's weekly, whether it's monthly, it doesn't matter, that they pay a very high dividend, but they're still losing to the S&P, right? They're still losing to the S&P. So that's my main criteria for buying some of these funds is, number one, the yield is important. But number 2 is it beating the S&P? Now, again, you also have to keep in mind that, again, there almost certainly will be periods where any stock or ETF underperforms the S&P. So frankly, you want at least a year or so to judge fairly. But you also have to keep in mind too that, let's just say that it's a Bitcoin ETF. Like, you know, a good example of this is XBTY, which is one I just sold. Bitcoin obviously up a lot recently this past week, but if we look at XBTY, it's actually down. And not only that, it's actually down significantly. It's down about almost 2%. And that's a week where Bitcoin was up like 10%. So this is a prime example of one that, I sold out of my entire position because it's clearly underperforming. So that's the thing you have to keep a close eye on. If you watch this video 6 months, a year from now, I may very well not own some of these, and I may very well own other ones. But this is just what I'm going off right now. This one I am very confident in, at least over the long run. There will be periods where it will underperform, especially if we get a bear market in Bitcoin and in crypto. It's bound to happen. The question is it going to outperform over the long run? And this is one I'm fairly confident will. The next one is MSDW. This is the Round Hill MSDR weekly payer. If we look at it here, 99 basis point expense ratio, 18.67. That is not the right dividend. This one, and when I quote the dividend numbers, I'm simply going off the last week. So that very well could change significantly because a lot of these are the underlying index or stock is very volatile, which means the dividend can change very drastically week to week. This one is a prime example of it, right? If we look at this one, it's paid as high as $1.39 and as low as 35 cents. So that's like a 300%, 400% swing. So this one has underperformed the S&P. We also have to keep in mind that MSTR has also underperformed the S&P. The reason that I still own this one, even after what I just said, is I'm confident in MSTR over the long run. Like I said, there will be periods where the underlying index will underperform. But when you look at MSTR, I think MSTR will do just fine over the long run. And when I just looked at XBTY, if we look at this one over the last week, right, this one's up about 13%, which is more than MSDR, which is more than Bitcoin, right? So that's exactly what I want to see. Yes, this one has underperformed, but look at what happens when MSDR goes up. This one goes up even more, and you're getting that dividend. So this one is one that I'm going to be watching closely. This one has only been around for just over 2 months, right? The inception date was July 24th. So I don't think that, 8 weeks or 9 weeks, 10 weeks, whatever it's been, I don't think that's a long enough sample size to make any large judgments. Now, again, if this one would have been like flat on the week or down on the week, that would make me very concerned. That would make me very concerned. So, but given it was up significantly on the week, it doesn't make me that concerned, right? I mean, if MSDR goes up to $500 a share, this is probably going back to $50, $55, $60 a share, right? And I think that's going to happen at some point. So this one I'm still confident in. And this is also the one that has the potential to pay the highest dividend as well. So the next one is going to be WPAY. This is the equal weights round hill fund. It has a 99 basis point expense ratio. The dividend yield based on last week is around 84%, so very good there. And it has also outperformed the S&P, although keep in mind, it's only been about just over a month, almost exactly a month since this one's came out. It's actually only paid dividends 3 times. The reason that I like this one is very simple, right? We have positive price returns and we have a very good dividend yield. So I do like this one. Again, all of these I'm watching very closely because when you look at these funds, they're very risky, right? That's something that I need to make very clear here. They are very risky, right? You look at XBTY. You can easily lose money in these funds. So you have to be very careful. That's also why I like diversifying. That way, if you lose money on one, it's not necessarily going to kill you, right? So that's what I like about diversifying. The next one here is YBTC. This is one I've talked about before. This is one that I'm actually a little bit concerned about, right? I mean, if we look at this fund, it was actually flat on the week, right? It was flat on the week, which again, it was a week where Bitcoin was up considerably. So that's something that makes me a little bit concerned. But the one thing that makes me a little bit more content is this fund's been around for almost 2 years, right? It came out January 2024. So about, 20 months, or whatever that, about 20 months. And it's up, but when you account for dividends, it's up 101%. The S&P is up 43%. So it's more than doubled the S&P. But I mean, the price returns are slightly negative, about almost 9%. So that's something that does concern me, right? That's something that definitely does concern me that, Bitcoin is definitely up in that time. I don't think it's up a crazy amount, but it is up. But yeah, this is down. But again, given when you account for the drip returns, it's doubling the S&P. I'm okay with that, right? I mean, if this company loses, 2, 3, 4% a year in share price, but it pays a 47% dividend yield, which is basically what it's paying right now, I'll take it, right? If you're down 3, 4, 5% share price a year, but you get a 47% dividend, you're still killing it, right? You're still killing it. So I'm okay with that. And the other thing about this one is that this is the one that's been around the longest. So this is the one that I'm most confident drawing conclusions on, because, almost 2 years of data, you're probably fairly safe to draw conclusions based on almost 2 years of data. So we'll have to see, though. We'll really have to see. And not only do you want to monitor them when the underlying is up, you also want to monitor them when the underlying is down, because there will be bear markets in stocks, in the market, in Bitcoin, and you want to keep in mind that, hey, it's going to fluctuate, but when the underlying is down 10% and the ETF is down 20%, that probably should make you concerned. So that's something to keep in mind. The last one is the only one that I've never actually made a specific video on, is CHPY. Now, this is the Yield Max Semiconductor weekly payer, 99 basis points. So basically, it holds the big semiconductor names: Broadcom, NVIDIA, Lam Research, Micron, Qualcomm, TSM, ASM Research, Kia, Intel, AMD. So very popular, big names. And this one obviously pays Friday, given it's the fifth one, but this is one that came out back in April. So this one came out almost exactly to the day of the bottom of the stock market. And ever since then, we've seen, the share price is up 25%, almost exactly the same as the S&P. But I mean, when you account for reinvesting dividends, it's almost exactly double the S&P. So this is one that a lot of people look at it and say, hey, it's got these positive price returns. It's got a crazy good dividend. Actually, it's 37%. So I mean, it's crazy compared to your average dividend fund, but not compared to these other ones. So my conclusion with this one is also watch very closely, because if we have a market downturn, chances are these semiconductor names are going to be down more than what the broader market is. So that's something that I'm going to be watching very close, because the reason that this one has had very good share price returns may very well be that it came out almost exactly when the market bottomed. So that's something that I'm going to be watching very closely. If this one seriously underperforms in a bear market, that'll be my cue to dump it. But again, it's only been around for actually exactly 6 months. So all of these except for YBTC, I think the jury's still out, because none of them other than YBTC have been around for even a year yet. So I think it's hard to draw conclusions. That's why my broader strategy is to diversify and to not have too many eggs in one basket. Some people will say, oh, you're going to lower your returns long term. Not necessarily. Not if you can avoid the duds. So that is my get paid dividends every single day of the week video. Like I mentioned at the start, if you get value, please like, subscribe, comment, check out those links below, and stay tuned for more.